Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, and we are now sitting here at March 30th, one more day left in the month, 2022, and we're getting on to 5:30 in the evening. Well, another down day in the stock market. We're getting a little bit of a bounce off of that in the early evening session. Metal markets, I think they got beaten up enough this week where they're just sort of drifting sideways. The dollar's staying on the weak side. Most currencies rallied against it. The yen had a spectacular rally but gave up a lot of that today. I was pretty happy with the Mexican peso as well. Bonds and notes putting on even more of a rally. They're up in the early evening trade just a little bit too. And you had about a $3 rally or so in the energies, and they're giving back a little bit of that tonight. So what did the market do? This is so interesting. The market fell apart, got a bounce. It normally comes up and challenges if it's going to get a hard rally, the 18-day average of closes. This is Friday's action. Now remember, this is a weekly chart. So for the week, you're up 1.44%, and that's up 65 points. If the market wants to neutralize that, it'll start slipping back towards 45.11 by Friday. We'll see. It should get interesting. This is what I call a vertical price rise. It really doesn't give you much of a chance to get involved. There's generally one or two spots that can happen. It comes out of nowhere, and it shakes the foundation of the market. Now, what you have to ask yourself is the market got enough strength in this to go up and make a new all-time high or not? That's going to be the battle, all right? I was of the opinion and am that it's not going to. We'll see if I'm right or wrong. Along the way, you've had one break in the market where you had, in this case, up until just today, where you had a low that was where you didn't take out a previous day's high and you made you dropped down. That's all, not a lower and low, just dropped within it. You did again that today. So two of these out of this whole rally. That's a sign of strength, not weakness. Let's assume the market wants to break from here. If it does so, as long as today's high isn't taken out, we're already showing some of Thursday's trade. The first support, 45.30, second, 44.62, let's call it. These are the important numbers. If the market gets all the way to 44.07, this whole area, I will say, failed to make that high, and that might be all she wrote on it at this point in time. But that we're not at that point. Notice how the market, when it first hit the upper Bollinger Band, just moved to the right-hand side. The initial fight in the market, and you can see it here, was between the 200 and the 200-day average acting as support and the 100-day average in the Bollinger Band. You started probing that last Friday, and this week has seen the market actually get through that in a pretty important way. Now, what does it do from here is going to be the question, because if you take a look, you have an embedded reading. What does embedded mean? An embedded reading goes this way. When you get an embedded reading, it means that on breaks that don't take out a previous day's high first, the trade should be a buyer. There's areas to buy it. I teach it in my enhanced course, and if you want to learn about that too, take your cursor right now, move it all the way to the top of the screen. You'll see an icon. Click that on at any point, and it'll take you to the area where you can find out all about that. But you want to add this to your arsenal, in my opinion. It's very important. So if the red line closes under 79, then I think we're going to attack all this. If it doesn't, pullbacks are still buying opportunities according to the pros. I have the same situation in the embedded reading in the NASDAQ. However, there's a difference. Now you're getting into all this resistance. And I told you, if it kept coming up, it should run into a big amount of resistance. It starts with the Bollinger Band, the 200 and 100-day averages. You go and you challenge them, and you can see what you're doing. This is the battleground. The bulls are still controlling the day. This, not this, any of this, rules the day. When you lose the embedded rally reading, that ends the rally as well. And you probably get back, in this case, because all these averages are up here, all the way back for a run or a try at it at the 14,234 level right now. In the Dow, You have a market that has come up, and as you can see, it has cleared the 100-day average. It was staying under it for a while here. It is embedded, so it still tells me the pros are trying to buy this market on a break. The same thing I said in the S&P, no different. Difference, though, this market goes more with the NASDAQ. As you were coming up, you ran into this market at key resistance. Begins at the Bollinger Band, the 100, all the way to the 200-day average. If you're buying up here, you must think as a goal you're going for the highs. What other target is left on the chart? I don't see any. I don't know. If this market gets that red line to close under 79 tomorrow, it would be a sign you're going to pull back to the 18-day average, and maybe the market runs out of some upside momentum. In the VIX cash, I've got this big blue line on here showing you where the market based from. Are we going to go challenge that? As long as you keep the embedded reading, the pros are selling rallies, looking for the market to continue down. Normally, there's a window envelope. There's two areas they look. They look at Bollinger Bands, moving averages, and window envelopes. I never show the window envelopes here, not because I'm not a nice guy. I want you to be in my subscribers to see all the tools that I have. I think you'll learn from that. Kramer, I know, uses window envelopes, talks about it. Kramer talks about a lot of technical tools. People don't realize how good he is at those tools, and he is quite good. But as long as this stays bearish, what's the other stock market doing? People don't want the insurance. In the bond market, getting an important rally. If it's going to keep going, and it could. Why? This is the embedded reading. You see how it's locked in. Today, at a 25 reading on the close, what do you have to do? Bye-bye. You're toast. Your history, you're out of your short positions. It's time to reassess once you lose the embedded reading. It's been a heck of a ride for the bears. Now the market's going neutral. I didn't say it's bullish. It's going neutral. 10-year note, same thing. You have to be out of the short. If you get a reading over 21, you got it. So long. Bye-bye. Heck of a run. Remember what I told you. Momentum often, the word isn't always, but often, turns before price. And this market's saying there might be more of a rally there. In order to re-embed, it's got to go through the whole process. Again, there's a way to do that quickly, and there's a way to do it over the long period. In the dollar index, the other day, I said to you, look for porpoising like this in the market, F1 term. And that's what you're doing, up, down, up. And that's what I'm expecting, more of the porpoising, if you will. New term, I like that. In the eurocurrency, notice how the market's up into overbought territory. Where? At the resistance point of the upper band. I don't think you're getting the pros to buy it up there, believe me. British pound in a downtrend. Did it wear itself out down here? I don't know. Momentum went flat. The trend is down, but the bias is up since you're staying over the 18-day average. You have to close back under it to get bearish again. Did the bears get knocked out of their position? I don't think so. I think if they put any on down there, they'll wait to take out that high that I'm pointing to. In Bitcoin, this is a dangerous area. You are embedded, so that's bullish. If it loses it, then I think you're coming back to the 42.5, 43,000 level. This is real important area. You're in a resistance zone between the 100-day average and the upper Bollinger Band. The bulls have control of it. Don't be a hero. In the differential between May and WTI, the May Brent and WTI, look at how that market went a little bit nutty today. Yesterday, that's if you look at this Tuesday, market closed back under the 18. Would it follow through? And you're getting that. So 8 1/4 difference is too high. That's what the market's saying. And 250 is too low. And the market's just sort of hanging in there. And guess where neutral numbers are in the Brent? You're at it. You're just hanging at what I call that line in the sand, not going anywhere. Momentum flat, no trend. Lower low, higher high, not seeing anything just yet. WTI has gotten itself to the point where you have higher lows and higher highs. It's back in its uptrend, which means support is 106.33. If you take out 98.44, that breaks the back of the market temporarily, and that could lead to a challenge of the 93.50 level. Who's in control? The bulls in this market, unlike the Brent. Neutrality in the heating oil, back to the support, but the trend is up. Higher lows, higher highs. You'd have to take out 321.14 to break the back of the market. Without that, the pros are buying here. Lots of risk. Come on. You're going to risk 23 cents. You realize that's $8,000? I don't think most traders are going to do that. Then we get to natural gas, which is still holding on to its embedded reading. Once you embed, and that's the key, you got to learn how to work with this. Here you have a market, loses the embedded reading, gets it back in an instant. That's called a bear trap. It normally sets the market up even higher. Now let's see if it can do it. And why is it a bear trap? Because when you lose it and you get it back, the people that got bearish in here, if you take out that day's high, generally have stops over that market, and that's what you're looking to see happen. Again, Bollinger Bands, enhanced slow stochastics with it. You got some game plans here. How do you find out more? Follow my finger. Just click on the icon and you'll find out about it. I'm Ira Epstein. Have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.